are somebody who leases space in your buildings to WeWork. You also are a personal investor in WeWork, correct?
I was an early investor way back in 2013 when I had met Adam and understood his vision. And we had done a building ourselves back in the 90s and turned into a tech building. So we understood the power of community and connectivity, and we thought his vision was interesting. So we took a building in Lower Manhattan after Sandy, where nobody wanted to come back to Lower Manhattan, and rented it to WeWork, where they have also their first New York City We Live. And then we morphed into another deal with them in Brooklyn, the Brooklyn Navy Yard, which we literally just opened this week, called Dock 72. But I just wanted to make the point that all the noise going on around WeWork and co-working, it's a very small percentage of the entire New York City market. The New York City market is over 550 million feet. WeWork has 7 million feet, so that's about 1%. The entire co-working sector is about 15 million feet, so it's about 3%. So we have to put all this in context. The world is not coming to an end. There are a lot of reports going on. There's a lot of discussions on TV and newspapers that, oh my God, the real estate markets, commercial market's going to collapse. That is just not going to happen.
But isn't it perception versus reality, where a lot of the co-working space has acted as a catalyst or a tailwind to a lot of the real estate values, where even if it is such a small segment or a small notional value of it, it's really monopolized 90% of the conversation?
Well, it has monopolized the conversation, but I don't think in terms of reality. And co-working is here to stay. It's a very important component of the ecosystem of our city and our country.
Well, let me ask you about the model, because I accept the idea of co-working broadly as a model. The question is whether the underlying WeWork model is the right one. So let's say WeWork, dare I say, files for bankruptcy or is in a true struggle. They come to you, Bill, and they say, look, we can't pay our rent. We cannot pay our rent. The question that I have for most landlords in New York and in London is, do you say to them, good riddance? Do you say, you know what, we actually don't want you to leave. We know you just did this build out. We don't want to have this empty space. We'll actually just lower the rent for you. Do you say, you know what, actually, we're going to do a direct relationship with the tenant and you can be the service provider offering all of these co-working services? What do you actually tell them? Because that, I think, is actually a fundamental thing about the ultimate model that we're talking about.
Well, first of all, I don't think we're going to get to that point because most of the WeWork spaces are very well occupied. They're in their 95% range. And if something did happen, first of all, we have security, we have letters of credit. But I think the discussion would be, okay, why don't we take over the space, hire WeWork or Industrious or some other provider, and have them manage it, and now we're in the co-working space.
But now we're back into the question of the model. There's two things about co-working. One is the concept of co-working, the idea that there's going to be these spaces where people are going to come in and work with other people. That's a concept. But the other piece that WeWork, in terms of a model, is it was this idea that you were basically going to take long-term leases, effectively, and then offer effectively short-term leases to either the individual or the companies. And the question is whether that model is here to stay.
No question that model is here to stay. Companies today want flexibility. They are looking for built-out space. They don't have to go through the brain damage of leasing space. We just, as I said before, we just opened up in Brooklyn. There's companies 1-person size to 50. You walk through the space. It looks incredible. So,
but you're doing that yourself.
No, that's WeWork is in about a third of the space. So,
okay.
So they've done it. We are also in some of our own buildings. We do pre-builts, and you're seeing now other landlords go into the co-working space. The tenants today want a range of choices. They want long-term leases, but they also want the flexibility. If an advertising agency gets a new account or a law firm gets a new piece of business, they all want that ability to have short-term space, and that's what you're seeing throughout the world. Buildings are layering themselves. They have amenities like at Dock 72, then they have co-working, and then they have long-term space. It's the change in the way people think about work, how the companies are trying to attract employees to their buildings and all these amenities. Our building in Brooklyn is fully amenitized: food, wellness, conference center, outdoor space. This is what companies are looking for to attract and retain their employees.
Bill, I hear what you're saying about how WeWork is really only 1% of the commercial real estate in New York City, and that's a fair point. I've had other people say to me, well, they were the marginalized player that was pushing up office rents throughout places, that as a result, you saw much higher prices. What do you say to that argument?
I don't think we've really seen a significant, the prices have gone up, but there's a significant amount of supply that's coming on, but it's being taken. And the whole way people look at New York City real estate, it used to be Midtown, downtown. Now it's Midtown, downtown, Midtown South, Meatpacking District, Brooklyn, Long Island City. The choices that companies have to look for space are vast. And the market's responding. Everybody's putting capital back in their buildings.